Welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, how to use LPL Financial for the Mega Backdoor Roth Solo 401k strategy. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over so that we can be sure to get to them all. Let's get started. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Let's first lay the foundation with understanding the basics in terms of solo 401k eligibility. So a solo 401k plan is for a self-employed individual with no full-time W-2 employees. So there's two components. You first need to be self-employed, and the way that you demonstrate that is by having earned self-employment income. There's different ways to have earned self-employment income. For example, if you're a 1099 independent contractor, or you have a single member LLC that's taxed as a disregarded entity with the income reported on your 1040. Earned self-employment income would be income reported on Schedule C of your 1040. Whereas if your self-employed business is taxed as an S corporation or even a C corporation, then earned self-employment income would be income that you receive from that S corp or a C corp, and that's reported as W-2 wages. Lastly, if your business is taxed as a partnership, earned self-employment income would be income reported on line 14 of the K-1 from the partnership. The other prong in terms of solo 401k eligibility is that you cannot have any full-time W-2 employees working for any business owned by you or a spouse, if any. Now, of course, you could be a W-2 employee, or even your spouse could be a W-2 employee, and you would still be eligible to set up a solo 401k as long as, again, there's no other non-owner, non-spouse full-time W-2 employees. Ultimately, will be ideal for individuals such as independent consultants, realtors, freelancers, and other small business owners. Now let's continue to lay the foundation with understanding the Mega Backdoor Roth before we turn to how to use LPL Financial for the Mega Backdoor Roth Solo 401k strategy. So someone who's eligible to set up a solo 401k plan could choose to set up a more advanced solo 401k plan that will allow for Mega Backdoor Roth Solo 401k contributions. So for example, not all solo 401k plans will support this. For example, your typical basic brokerage plans, including the solo 401k plan that's offered through LPL Financial directly, which they're outsourcing to a census based on experience and feedback from others. So with those basic plans, you cannot make Mega Backdoor Roth Solo 401k contributions. Instead, you would need to have a solo 401k plan provided from a third party, such as my solo 401k Financial, that allows you to make Mega Backdoor Roth Solo 401k contributions. And then you can still have your account though at LPL. So what is a Mega Backdoor Roth Solo 401k contribution? Well, it's really two components. You first make a voluntary after-tax contribution, step one, and then step two, you transfer those voluntary after-tax solo 401k funds either to a Roth solo 401k or out of the plan to a Roth IRA. So it's a two-step process. Now, there's some great features or advantages of a Mega Backdoor Roth Solo 401k compared to other types of Roth accounts. For example, it has much higher limits, 10 times how much one can contribute, for example, to a Roth IRA, and multiple times how much one can contribute to a Roth 401k. And that's because those voluntary after-tax solo 401k contribution limits would allow you to contribute all the way up to the overall limit. For example, $70,000 for 2025. Additional advantages is that there's no income limits. So unlike a Roth IRA, where if you make too much money, you're not eligible to make Roth IRA contributions, there are no such income limits above which you can't make Mega Backdoor Roth Solo 401k contributions. So that means that it can be a great plan for those that are high income earners. Now you need to have plan documents that allows you to make these Mega Backdoor Roth Solo 401k contributions. For example, the plan offered by my Solo 401k Financial will allow for both steps. So our plan documents, number one, allow you to make the voluntary after-tax Solo 401k contribution. And then also our plan documents allow for the in-service conversion to a Roth account. Our plan would allow for both a transfer to a Roth Solo 401k or out of the plan to a Roth IRA. Now, it's not, of course, the basics is that you need a Solo 401k plan that allows for the Mega Backdoor Roth Solo 401k contributions, meaning both the after-tax contribution and then the transfer to the Roth account. But of course, it's also going to make sense to work with a provider such as my Solo 401k Financial that has deep experience in helping thousands of customers through the Mega Backdoor Roth Solo 401k process, because there are technical steps that need to be followed. For example, you first need to deposit the after-tax Solo 401k contributions into a separate after-tax account before they're transferred either to a Roth Solo 401k or a Roth IRA. In addition, even though the first step of making the voluntary after-tax Solo 401k contributions, that doesn't need to be reported on the personal tax return or the business tax return. The second step, when you transfer the funds to the Roth account, that does need to be reported on a Form 1099-R. And we handle that Form 1099-R as an optional free service for our clients. We have a form on our website that customers can use or advisors can submit on behalf of the client to quickly and easily provide us that information 24/7. And then we add your plan to the queue to prepare the 1099-R. And we'll handle that as an optional free service for our customers. In other words, no additional charge. So it makes sense to not only work with a provider like my Solo 401k Financial that offers the plan documents, but also has the experience and also provides the ongoing compliance support as an optional free service. Now, my Solo 401k Financial, we offer the plan, we provide the support, but we don't hold or have access to our customers' accounts. So that makes us very compatible, for example, with those that want to work with an advisor, such as an advisor at LPL Financial, because the client can have the documents from my Solo 401k Financial, but then just have their accounts over at LPL Financial so that their LPL Financial advisor can help them manage their money, etc. And then we're here to also work with the advisor to make sure that everything is set up correctly at LPL Financial. So for example, the IRS expectation is that a separate EIN number is obtained for the Solo 401k. This is different and distinct from the EIN number that you might have for your self-employed business, right? You might have an EIN number for your self-employed business, for example, to pay contractors. Well, the IRS expectation is that a separate EIN is obtained for the 401k. And this makes sense because really a 401k is a separate legal entity. It's a trust. When you make those 401k contributions, they're held in trust for your future benefit when you retire. In other words, it's not an asset of your business. It's not even an asset of the Solo 401k participant that they can use right now without restriction. So as part of the onboarding process, we will obtain the EIN number. We can provide it to you and your LPL Financial advisor so that they can open the brokerage accounts at LPL Financial under the name and EIN number of the Solo 401k. with separate accounts if there are either different types of funds, such as pre-tax, Roth, and voluntary after-tax, like in the Mega Backdoor Roth solo 401k scenario, as well as if there are different participants, such as a husband and wife that are both working in the same business, both participating in the same solo 401k plan. So ultimately, that's how one would use LPL Financial for the Mega Backdoor Roth Solo 401k strategy. The clients will obtain the documents from us, but open up the accounts at LPL. So you need both. You need to have that separate solo 401k plan that allows you to make the Mega Backdoor Roth Solo 401k contributions, and then, of course, have your accounts through LPL Financial if that's where you choose to have them. So here's a quick walkthrough. Of course, one would want to verify their eligibility, like we talked about in the when we were laying the foundation in terms of being self-employed with no full-time W-2 employees. Then step two, choose as a provider like my Solo 401k Financial that offers a plan that allows you to make the Mega Backdoor Roth Solo 401k contributions. Then you'll need to have your accounts, which can be at LPL Financial. We've had many clients and their advisors. We've helped them open up those accounts over at LPL. Then, of course, you need to make your contributions. And with our plan, you can choose to make a mixture of pre-tax contributions to say reduce your taxable income now for the year for which you make the contribution, as well as Roth and Mega Backdoor Roth contributions. And then others will say, well, I'd rather just focus on making Mega Backdoor Roth Solo 401k contributions. So I'll skip the employee, I'll skip the employer, and I'll just make 100% voluntary after tax. And if they have the self-employment income to justify it, then they could contribute the full 70,000 as a voluntary after-tax contribution and then transfer those funds from the voluntary after-tax solo 401k account to either a Roth solo 401k or Roth IRA. And then finally, either the client or the advisor will let us know about that after-tax to Roth transfer by submitting the form on our website that we use to collect the information it's need to prepare the 1099-R. And as long as we receive it in a timely fashion, then we'll add their plan to the queue and we'll handle that as an optional free service for the client. So here's a quick example. We've got individual that's self-employed, no non-owner, non-spouse, full-time W-2 employees, who's age 45 and has $250,000 of earned self-employment income. They may choose to skip the employee. They may choose to skip the employer. They just make the full 70,000 to the voluntary after-tax account, which again can be at LPL Financial, and then transfer those funds from the after-tax solo 401k account at LPL Financial to either a Roth IRA, which could also be at LPL Financial, or to another brokerage account for the solo 401k for Roth solo 401k funds, and then start investing. And then they'll have that potential for tax-free growth, just like any Roth account. The key considerations, again, are having the plan documents, right? That's the foundation. Additional key considerations are converting the funds quickly from the voluntary after-tax account to the Roth account, because those funds need to be in that Roth account so that the gains can grow with that tax-free growth potential. Providing us the information that we need to prepare the 1099-R, so submitting that online form, maintaining accurate records. And then, of course, if the value of the plan, including all the different sub accounts, right? You might have pre-tax and Roth, there might be multiple participants. So the sum of those different accounts, as well as the value of any defined benefit plan that might also be sponsored by the self-employed business, you have to factor that value in as well, if applicable. And once the value exceeds $250,000, there is an informational tax filing requirement that applies, which is referred to as a Form 5500 EZ. So we also handle that as an optional free service for our customers, where we file electronically under the electronic filing system, just to make it easy for the client and the advisors. We just have to be notified in a timely fashion, and then we'll handle that as an optional free service. Again, no additional charge. So some common mistakes and pitfalls. Not having a plan that allows for the Mega Backdoor Roth Solo 401k contributions, delaying the conversions, right? So that income is accruing inside that after tax account, gains are accruing inside that after tax account. In that case, those gains would be taxable at the time of the conversion. Misclassifying contributions, exceeding limits, using only a brokerage account without, again, the plan documents that you need to govern that account that will allow for those Mega Backdoor Roth Solo 401k contributions, missing the 5500 easy filing once the value exceeds $250,000. All right, that takes us to the end of the slides that we wanted to share. Thank you so much for joining. We're going to turn now to the questions that were chatted up in the meantime. So yes, we most certainly do have live customer service. So of course, we have our daily webinars hosted by myself and the other owner of the company. We also have scheduled calls, which you're welcome to schedule using our online calendar at mysolo401k.net/book. So please feel free to use those channels. Of course, we also answer questions via email, etc. Okay, we've got a Rob's question. Does the IRS, thank you so much for bringing the Rob's question, which is the 401k business financing plan. So in our experience, there are no exceptions that would allow you to use the Rob's plan to fund the purchase of a business from your parent. Even if it's an arm's length transaction, even if it's a fair market value, there's no fair market value exception. So you would definitely want to wait until at least 2026 before you definitely need to wait until at least 2026 before starting to make 2026 contributions. And then you also want to be very confident that you'll have the income to justify those contributions so you don't end up in an excess contribution scenario. Great questions. Thank you so much for bringing the questions. We do appreciate it. We have more time if you want to chat over more questions. So please don't hesitate to chat those over. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that the content is valuable, which helps other solopreneurs like you find it. And subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. We also want to invite you to our community. We have the largest community of solopreneurs, solo 401k owners. You can access it easily at mysolo401k.net/my community. With over 30,000 members, we have vibrant forums. We have a library of videos and webinars. It's totally free to join. It's not just for clients. All are welcome. So please don't hesitate to join. Again, at mysolo401k.net/my community. Well, looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement. Thank you. Thank you, everyone.